So you're a demo trader and have no idea when you should be moving to a live account. Or if you're trading live account, despite all the losses you hit, you ask yourself if it is still worth keep trading. Or maybe you are very good on demo trading, but when you go to your live account, your strategy doesn't work anymore. Well, if any of this is familiar to you, then this video is a solution that you're looking for. I will help you to understand the key differences between a demo trader and a live trader and tell you which one is the best and how you should be doing the right things for you. Alright guys, so here we go. Let's get started and make sure that you pay attention all the way till the end of the video, because trust me, this concept, these things that I'm sharing with you guys are probably way more important than any technical things that I share in my channel with you so far, because everybody wants to learn how to do the sniper entry, the high risk reward trade, everything, but nobody understands the importance of psychology and mindset in trading, how crucial they are. Without them, you're not going anywhere. So this being said, let's get started. Now, demo trading versus live trading. Let's start understanding first what are the key differences between these two, okay? And the number one difference I want to start with is society and social media. What do I mean by society and social media? Guys, this one here is a number one reason why a lot of traders fail so much, because people I don't know why there is this thing that people believe when somebody says, oh, I trade demo, or someone says, oh, he trades demo, she trades demo. I don't know. Whenever someone says that they're trading demo account, they feel ashamed of themselves. They feel like, oh no, I shouldn't say that because otherwise people are going to think bad about me. Or I shouldn't be, whatever. Like saying that you're trading demo, there is nothing wrong at all. Actually, it's probably one of the best things that you should be proud about yourself, and saying to people that, look, I just started now, and what I'm doing is trading demo because I want to grow as a person. I want to become a good trader, understanding actually how the mechanism of trading or everything out there literally works, right? So why I want to really emphasize on this one, because not many people talks about it, is that people feel that there is something wrong with it, but in reality, there's nothing wrong with it. You need to be confident, because you have to understand, right, that the most important thing about trading is about being confident. If you are not confident, if you don't trust yourself, right, and you don't practice what is needed to be practiced instead of focusing on what other people are saying or thinking about you, you will never ever make on trading. Being confident, right? And this is the most important thing. The next thing, the very important thing, is that there is a major difference between you being confident for your own personal growth and then being you confident and scamming others, right? Because if you're someone that just trading demo and scamming others or whatsoever, and that's your purpose, then stay away from this video. Like literally, don't even bother to watch anymore, okay? But again, if you are trading demo, let me tell you this, guys, please be confident, trust yourself, trust the process, okay? So be confident, trust you, and trust the process, okay? This is the number one thing that I want you guys to understand, that don't be ashamed, okay? Just don't be ashamed. Now, let's move to the second one. What is the second one? When it becomes all about trading demo and live trading, one thing that a lot of people don't understand is the lack of emotional control. What do you mean by lack of emotional control? It means that whenever you're trading demo, you do not have the sense of urgency, the sense of fear of missing out, the sense of feeling like you're doing something wrong. Therefore, even if you do something wrong, you wouldn't pay attention to it because your mind is so focused on making the trade right, making the money right. And all you do, right, is literally building a very, very bad habits, okay? And the key difference, which is literally the most important one, because look, in trading, we got a lot of things that are important. But one of the most important things that really matters is psychology, emotion, and discipline, okay? If you don't have your emotions in control and you do not master them, you will never understand what you should be doing. So how do you do that? Now, this is something, as an approach, how do you apply on that? You should be testing out your emotions on a real life environment, okay? With a very, very low risk. Okay, so what do I mean? Again, guys, I'm not a financial advisor, okay? I'm not saying you should be trading live. I'm not saying any of it. This is just for educational purposes. But all I want you to understand, guys, is that in order for you to know the part of your emotions, okay, if you're trading with demo and you feel that there are certain emotions that you can control, or you feel it while you're pressing the button, this is good. There's nothing wrong with it. Why it's good is because once you know what are those emotional responses that you're giving to the market or you're giving to yourself, in that case, you should be taking the next step, which is literally writing down everything on your trading journal. Why? Because on your trading journal, you get to know yourself. And that's the most important things that you should be doing when it comes to trading demo versus live trading. But if you're not capable of building that specific emotional response to demo trading, then what you should be doing is this point over here, which is testing out emotions on your real life environment with a very, very low risk. And what you should be trying out is a very small account, just a very small account, and you can try to see, few cents, few pounds, few dollars, whatever currency you're trading, and see what happens to you, what type of emotional response you get out of a stop loss, or also from hitting a TP. Because a lot of people, they get excited when they hit a TP. They're like, oh, I went in TP, I made that money, oh, I'm the beast, I'm the best. No, you're nothing. Okay, you should be feeling nothing, not when you're hitting a stop loss, or not even when you're hitting a TP. Right? So having that, again, you can translate and bring everything back to your trading journal. Because once you start understanding and highlighting, right, that those are the emotions that you have, you will get to know yourself better, and you will know what are the steps that you can take next in order for you to improve yourself. Moving to the next one, we have the lack of accountability, right? You have to be accountable for yourself. You have to take action. You have to be proactive. You cannot sit on a chart, right, being like passive and not taking action about what is needed to be done. So what do I mean by this? Is that when you're trading demo, there are so many tiny mistakes that you make that you say to yourself, that's fine, you know what, I don't need that, I can improve that or whatever. Or you keep saying, maybe when I trade live, it's different. I'm sure I'm not going to do this type of mistakes. This is just demo, nothing going to happen, blah, blah, blah. Well, guess what? Again, this is absolutely wrong. Why? Because in order for you to be accountable for your own actions and taking response and giving response to it, you got to do the same exact thing that you did previously over here, which is with the emotions. So this one is linked to this one. What do I mean with the emotion? It means that both of them goes back to this section over here, which is the trading journal. Guys, trading journal is the best friend of any trader. If you don't have that, if you don't use that, then I'm sorry for you. You're going to have such a hard time to become a full-time trader. Okay, so that's the number 3. Now, moving to the number 4, which is spread and slippage. Now, this is something that unfortunately I heard a lot from a lot of traders complaining about it. So what happened is that many brokers, okay, what they do, they give you different type of spread and slippages on your demo compared to your live trading. Now, initially, I thought that was not the case because I traded only with few brokers, and honestly, I never had any problem with those brokers. I never seen anything like this when I started. But also it's true that I never traded for such a long time on demo. Probably the highest I ever did when I started trading was literally for a month. Okay, literally for a month. And I'll tell you why I did it for a month and explain you that later. But when I did that for a month, I realized that spread and slippage were almost identical. But some cases, well, many cases, I had a lot of traders telling me that this was a major problem for them because they used to see different thing on demo, but when they jumped on live, everything else was different. But guess what? This is normal. Why is normal? Because the way you are not accountable for your actions on your demo trading is the same goes for the broker as well. Because the broker, they don't make money from demo trading. They make money from live trading. So it's pretty obvious that they wouldn't even bother to give you the exact price, exact whatever you want to say. It's normal. So if you just trade everything in demo, right? And let's say you got Arrow USD, you got one pair, and on that you got a 0.01 spread, right, on a demo account. Then you go to a live, and for whatever reason, your broker, it gives you 0.03 or 0.04. Now I might be like, that's not a lot. Well, this is actually a lot, especially because if you're trading, right, let's say this is the high, this is the low, and you're trying to take a trade over here, putting your stop loss above this high, and then you don't take in count the spread, what do you guys think is going to happen? On your demo, you are used to see these kind of things, and then you see price going down. But then on your real, if price is here for whatever reason, you're already out of the market. You're like, what in the hell? How come I'm already in the market, right? So do you guys understand why it is important for you to distinguish this important element between demo and live trading? Now, moving to the next one, which is the fifth point, is money and margin. Again, same story as the spread and slippage. What do you mean by money and margin? Many times when you trade live account, you have noticed that for whatever reason, if you blow up your account or you're almost about to blow up your account, you always get a margin call, right? So you get an email, a notification or something from your broker telling you, look, you're going beyond your margin, so you need to close your position because you cannot carry on executing whatever you're having on the market, right? And many brokers, again, same as spread and slippage, when you have a demo account, they'll let you do whatever you want, okay? Some of them, they follow the similar protocol as live account, but some other, they just let you do whatever you want. So what happens is that you start behaving like a gambler, right? You start gambling, you start martingale, you start recovering your losses, you start like doing hell amount of things. So you do not train your brain. They need to understand how to do the appropriate risk management, okay? And that's something that is very, very dangerous. Now, by the way, I didn't write down here the point that I'm discussing about the action you should be taking. Actually, you know what? Let me write it down so you guys can take note of it. So again, we said lack of accountability is trading journal. So make sure that you do that. Then again, when it comes about understanding the spread and slippage and the money in margin, both cases, just always test out on live and demo to see the differences. Worst case, let me tell you this, guys. Worst case, even if you trade demo and you see that your live account is a very different spread or whatever, just for the sake of being safe, trade always large. What do I mean trade always large? Like if you put a stop loss above a high, don't keep it tight. Give a bit of breathing room. In this way, you will help yourself to train on understanding how to deal with larger spreads and also how to be able to don't have any fear of whatever just because you feel like price can tap you and then run away from your favorable direction. Okay, so then we said, so this goes for both basically spread, margin, money. So try it out and always trade large. Then if we move to the seventh point, which is the psychology pressure. Now, same as discipline, emotional response, psychology pressure is probably another most important things ever when it comes the difference between demo and live trading. When you're trading demo, all right, you tend to take a lot of action, same as I said before, that you're not capable of connecting and understanding the impact that those type of action can have on your long-term progress. And again, you take a trade and you feel like, oh, it's fine, this time is all right. I did this, this was wrong, but maybe I'm not gonna do it next time. Or you feel like, oh damn it, I shouldn't have done this, but then it's fine, I'm not gonna do it on my live account and whatsoever. Now, what I want you guys to understand is that psychological pressure is something that you only gain it by doing live trading. Why I say that? Well, if you treat your demo like a live trading, then you can get the same, but live trading will give you, because every time that you're sitting on the chart and you're trying to follow the candle by candle, or you're trying to follow, specific price action, specific whatever, you do have this pressure psychologically, which is something that you shouldn't be having it on first place, but you do have it because many common reason is like people always start having the fear of missing out, right? So like FOMO. Now, when you're demo trading, for example, you don't have FOMO because you don't even know the meaning of FOMO. If you miss, it's fine. You just jump on it. You don't even think about the risk exposure. You just jump on it. But when it's live trading, you jump on a trade because of FOMO trading, and what tends to happen, right, is that you risk higher, you make a mess, and you blow your account. Okay? So again, how do you understand this psychological pressure? How do you grow yourself? Those understanding of the things that triggers you the most is the same exact thing as we did before over here. All goes back to trading journal. Now, what do I mean by trading journal? No worry, I'm telling you everything, and then I'm going to give you the solution at the end, right? Just bear with me and keep listening, okay? Lastly, the last one, what do we have, and this is important again, is demo too long will ruin your trading. What do you mean by demo too long will ruin your trading? Well, the biggest problem is that a lot of people, when they start demo trading, what they do is that they get so much used to demo trading that as soon as they try to jump on a live trading, they just get crazy. Because first thing first, they're scared as hell. They're like, oh damn, now I'm putting online my own money. What's gonna happen if I lose that? All right. Or maybe they are different, not used to see different type of spread, different type of slippage, or they feel like, oh, I never done this before. What do I do now? And just by saying these kind of things to yourself, what do? You just start literally again looping yourself, which means you start making a lot of psychological mistakes, a lot of emotional mistakes, right? And a lot of other bunch of mistakes that literally ruins your trading live account. This is unfortunately something that I've seen on so many traders. They've been working so hard on demo trading, like they literally been doing a lot, okay? And then at one point what happened is that when they jumped on a live trading, they lost it all, and it took them so long. It's like they not only worked hard for the demo trading, right? But then after, like, let's say 6 months, they probably spent 6 months on demo trading. But what happened is that once they realized that unfortunately they were not capable of facing the live trading because of the fear of losing money, fear of so many other things, then they had to spend other 6 months, sometimes even more, trust me, 1 year, 6 months on their live trading. So in this way, all they did is literally they wasted 1 year and a half or 2 years of their life just by understanding the difference between demo trader and live trader. And the next thing you know, they are still there trying to adjust their psychology, their discipline, the strategy, whatsoever. And the next thing you know, 10 years, 5 years, 6 years pass by and they're still struggling a lot. Okay, so this is something that I really want you guys to understand, which is trade. If you want to trade demo, do it. There is nothing wrong with it, but you have to also understand the consequence of this, because the most important things for you as a trader to be able to trade a live trading account the way you should be doing, which is something I'm telling you now, is having the most smoothest transition ever. Yes, exactly. The outcome that you should be aiming for between live trading and demo trading is having a smooth transitions, right, from demo to live. Now, the question is, how do you do that? I'm going to tell you how you do that, and I also tell you the way I did it, because that's what I was saying. When I started trading, right, I started with a demo account for a month. I didn't do more than that. After that, I went straight to a live account, okay? And listen up, because that's the solution, and that's why I'm telling you. If you start with a small amount of money, guys, again, I'm not a financial advisor. Everything is for educational purpose. I'm sorry I have to repeat that, because I don't want any of you taking the wrong information from this video and then messing up your life, okay, whatsoever. I'm trying to genuinely help you to reach your outcome, trying to do the right things based on my experience, based on so many things I've seen out there, okay? So try to start with a small account. You don't have to jump with a huge account. Again, this is something that I see a lot. Oh my gosh, a lot of people, they trade demo for such a long time. They probably trade live a little bit, and the next thing they do, they jump for the FTMO. They jump for the prop firm. They want to deal with the 10K count, or maybe they want to deal with the 100K count, right? So they're like, oh, I'm smashing it. I'm going for the prop firm. Then as soon as they jump on the 10K count, what they happen is that they shit on themselves. Okay, that literally, because they never ever dealt with anything at this size of account. They don't even have that amount of money in their own account. How on earth they're gonna be able to deal with this on their live trading account? Just think about it. And that's something that a lot of prop firm relies on, and that's the reason why the prop firm industry is making hell amount of money, because they know the mindset of a trader. They know the bad habits that all these traders they have in common. So they trade demo for a few months. They feel like, oh, the strategy is blah blah blah, is banging, is mashing, is destroying. And then, boom, they straight away go to the FTMO. They want to do a challenge. And the next thing you know, you blow up your account so badly. And that blowing up account, it destroys your psychology so badly, they have no idea about. Why? Because all the points that I've listed over here, there are other points as well. But the one that I'm talking to over here, the 6 point, 7 point, whatever. Sorry, by the way, 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6, 7 point. Sorry, that I'm listing over here. They are the most common and the most important for you to be aware of. Okay, if you do not transition smoothly from a demo account to your own personal live trading account, you cannot jump on the FTMO. That's never gonna happen. And if you do it, then congrats to you. If you manage it, congrats to you. But I can tell you that the likelihood of people being able to do this is literally less than 1%. Okay, less than 1%. probably 90%, 99, 95% of people, they just blow up their account. So what exactly is the right approach that you should be doing in order for you to have that smooth transition, and the things that you should be aware of? Now, this is the most important part that you cannot miss it. Listen up. As I said at the beginning, start with small account. Now, what happens when you start with a small account? Start with small. And when I say start with small, start with just 100 USD. Okay? As simple as that. If you don't feel it, then you can start also with 50 USD, whatever. But then again, the point that you guys have to understand is not about the money, it's about the process. Okay? This is what everybody's missing out. You focus too much on money. You don't have to focus on money. You have to focus on the process. Okay, I'm sorry, but this is something that people don't understand. Trading is not about money. If you jump on this game thinking that, oh, I'm gonna make money, I'm looking for money, you'll never make it. You have to understand that this game is all about learning the process. Once you learn the process, then the money is the consequences. And trust me, I'm telling you, based on the thousands of mistakes I made over my 4 years of trading career, right? I made so many mistakes, and I'm not even ashamed to say that. Okay, I don't like, this is important, because if you don't make mistake, you're not gonna learn. Now, when you start with small amount, okay, the first thing you do is that you test out your inner emotions. Okay, that's number one. What do? Let's say you go 100 USD, you jump on a trade, you risk 1%, which is 1% per trade, $1. Okay, now you take a trade, and then if you're trading, you see how you feel when you start hitting losses. And there is not such one type of emotion. There's so many type of emotion. So what do you do is that test your inner emotion and collect emotional datas. Yes, exactly, emotional datas. You guys remember when I said earlier that here, right in the point, you need to have a trading journal. So these emotional datas get reflected on your trading journal. Okay, so once you reflect on your trading journal, what's gonna happen is that you're gonna start having 1, 2, 3, 4, 5, whatever type of emotions you have, right? You have everything listed. And then once you have everything listed, now you know what are the emotions that you should be paying attention to when you're taking a trade. And these goes same for TP and stop loss, as mentioned before, right? So TP and SL. Okay, cool. Now, the next thing you do, once you test out your emotion and you know the emotion, you start gathering data around your behavior, right? What do you mean by behavior? Is that the way you as an individual react to the way your emotions triggers you, right? So let's say you have a fear of missing out. What happens to you? Like you start, jumping on the trade, or martingale on the trade, or being aggressive, or increasing risk. Like the type of action you're taking are the type of list that you should be writing down again on your trading journal. Same as we said before. So you point out and you try to see and figure out which are those behavior. And then again, you got another list for yourself. All right. Now, moving on to the next one, we have also what? Behavior, emotions, everything links back to your psychology. Okay. When I say psychology, okay, this one is very, very in-depth. This itself requires one video, but I'm going to be telling you effectively what I can within this video. So what do you mean by psychology? Now, psychology, unfortunately, is something that is a result that it makes you aware, right? When you start understanding your subconscious even further. So you know the way I say to you, your emotions, your behavior. Once you have these two, right, listed, and you acknowledge yourself, the way your emotion triggers your behavior and everything, you start also recognizing certain type of patterns within you that you keep doing on the market. And that is part of the psychology, okay? It sounds very complex, sounds deep, but trust me, if you experience it, you know it, right? Unfortunately, psychology is something that you become aware after so many mistakes and so many data collection. You acknowledge facts that helps you to know, okay, maybe this is wrong. Maybe I should be doing this, right? Maybe I shouldn't be doing that. Maybe I should be doing the other thing around. But the only way for you to do that, again, collect data and trading journal. Right? Are you guys following me? Now, why I'm saying this type of exercise is important, because everything that I'm saying over here is not because you have to aim for you to make money. No, the outcome is for you to master the process. Again, guys, mastering the process. It's not about making money. Money is just the consequence of it. Now, once you start understanding how to master the process, then if you master the process and you have everything in line, Okay, and it's a time for you to pass from a live trading account to a challenge account to a FTM account, whatever you want to do. Why? Because now that you're going to deal with your FTMO or whatever prop firm, you have a system in place. You have a process, so you master the process. You have the system in place, and all you're going to do is just replicate that process from a live account to a challenge account, which is pretty much the same, because eventually in both cases you have what? Money, real money, right? Something that in demo you don't have it, so you don't value that. We as a human being, when we value something, then we give more priority to it, and that's how you achieve the great results. But I can promise you that if you do not do this type of little tasks, right? Those are few of the tasks, by the way, right? Because trading is huge. It's not about understanding technically. It's huge. There's so many things that you have to put it together. But if you do not start mastering this one by one, and putting all these things together, trust me, you will have such a hard time. Because just think about it. If you do demo and then you jump on a challenge, what exactly is it you're doing, right? It's like you got a driving license, right? You're learning how to drive a car, and the first instinct that you have, what is it? Like, if you're someone that, like, think rationally, you will be saying to yourself, okay, you know what? If I get a car, I'm getting a decent car, like a normal car that allows me to master myself, to be confident, to drive within the road and everything, right? And then later, if I'm rich or I make money, I go for a Lambo. But imagine if you didn't even get the license, and once you get the license, the first thing you do is you buy a Lambo. Like, let's be realistic. What is the likelihood for you to get into an incident because you don't know how to dominate or control your Lamborghini, right? And I'm not saying there are not people that are not doing it. Of course, I mean, rich kids, whatever, there are people doing it. And if they are successful, it's good for them. But I can tell you that that's not the case for 90% of the people out there. You cannot get a driving license and thinking that you can ride a Lambo the day after. That's never going to happen. You need to transition smoothly, right? And that's what we did here today. And that's what you should be doing every time when you're jumping on the chart. Go with the demo, go through all these bullet points, try to, create the list of that, jump on the trading journal, drop everything on the trading journal. From there, go again on your live account, test everything in your live account, and again, on your live account, you do the same thing. Take everything out, put it in your trading journal, see how it goes, start mastering the process, and once that's done, good luck with your prop firm challenge. I'll see you to the next one, guys.